Okay, let's do this. Today I'm going to teach you something about carbon emissions trading. Burning fossil fuels like coal, oil or natural gas move cars and produce electricity or heat. Unfortunately, this also generates carbon dioxide emissions, which drives climate change. The European Union has decided to reduce emissions substantially, which is where the emissions trading comes into play. The European Union fixes a carbon emissions target, then divides it into allowances. Each one allows the emission of 1 ton of CO2. These are now distributed to businesses. For every ton of emissions, the business needs to turn in 1 allowance. If it needs more or less, they can buy or sell them at a market. If it is cheaper to avoid a ton of emissions and sell an allowance, then the business will do that. But also, the business may choose to emit more and just buy an allowance from another business if that is attractive for both parties. Businesses can face challenges, though, when competing with businesses outside of the EU, where CO2 emissions may not be subject to regulations. On the whole, the economy has reached the emissions target in the cheapest way. And if the EU wants to reduce emissions, they just have to distribute fewer allowances. The market price will then rise.
I'd like to start with Prime Minister Rutte, and maybe you can tell us a little bit of the latest sort of tack that you're taking in the Netherlands in terms of addressing climate change, obviously understanding the natural world.
The 1.5 degrees Paris targets, but at the same time earning a lot of money, creating new businesses, new innovations, etc.
Recently, it's more interesting, right? Because you have to look at your whole value chain and what you influence. And in 17, so it took us that long, right? In 2017, the younger people in our asset management department made an analysis back. We're a bond holder, right? 130 billion of bonds. That's policyholder money. And they analyzed the last 5 years of corporate bonds, and they said we should switch to ESG indices for the whole for some of the assets, because they have actually performed about the same level but with lower volatility. So it's a good thing. And so they came to the executive board, and we said, okay, what percentage of these 130 billion would like to switch? And they said everything.
Countries have also the privilege to give subsidies. 400 to 500 billion fossil subsidies every single year. Countries could stop with that. That would be a great step forward.
What's new today? The UN report took all plausible deniability away from any business leader, any government leader, any student leader, any mayor. We now know the size of the challenge and the time frame we have to work within. And so the question is, where do we create the spaces for the courage for political leaders to set the policy landscape? And then what is the pressure on business leaders to go as fast as they can into those spaces? Those spaces can deliver.
What's the environment for renewables right now? I mean, you have an administration that, at least on the face of it, is not as amenable to the industry. Has that made things tougher?
Well, it's interesting to hear Ethan's report, because we completely agree with that. The drive that's been changing from coal to renewables primarily, and natural gas, of course, has been driven by economics. Fundamentally, it's been shale gas. It's made gas cheap. But then over the last 10 years, you've seen dramatic decrease in the cost of renewables. So with that has come growth of renewables. And if you look at a coal plant, it's really difficult to reduce cost, whereas renewables are still on a steep cost decline.
At the same time, we still pay in the United States much more for solar than they do around the world. We have a chart we could put up, actually, shows we pay like twice as much as the rest of the world. Why is that?
Well, there are a lot of different factors, and I think that's changing dramatically. I mean, if you look at solar costs over the last 5 or 6 years, they've come down by about 70%. So some of the costs that you see with solar was sort of early projects that were put into the market, but current projects are starting to compete without subsidies with conventional power.
And now, it used to be, when we were sort of further back in the solar industry in the United States, that it was public companies who were owning a lot of these farms. And now you've got private funds like yours that are doing this investment. Why did that transition happen? And what are advantages that you might have over a publicly traded company in doing these kinds of projects?
Well, that's a great question, because we just, as you may know, we just privatized one of those public companies. 2.5 years ago, we looked at this market and we saw that the buyers at the time, which were all these public companies called yieldcos, were starting to struggle. And we said, who are the natural owners of these assets? And the natural owners of these assets are long-term, yield-based investors. And so we fortunately were able to connect with some of the most savvy investors in the sector. And we created our first fund a year and a half ago, which we invested fully, which include total capital of about $6 billion in the sector. Those investors have now reinvested with us. So I think the answer is that the natural owners of these assets are long-term investors like pension funds, life insurance companies, and that kind of thing.
And so they're long-term investors. They're patient capital,
Yes.
as it were. How does the money flow? I mean, do you start getting returns away? It's not like a bond where you get a quarterly payment or something. How does it flow back to you if you're an investor?
Well, it does actually start flowing right away. At the beginning of the life of some of these projects, you do have a significant amount of debt, and you have a sort of tax benefit type of debt called tax equity, and you do amortize some of that at the beginning, but there's yield from the beginning, and there's pretty stable yield for the life of these projects, which in many cases is...
They're like bubbles. They're fragile. It's like these tulips. This is the greatest bubble story of all time. Back in the 1600s, the Dutch, they get speculation fever to the point that you could buy a beautiful house on a canal in Amsterdam for the price of one bulb. They called it tulip mania.
So a lot of people are very optimistic, as you know, with wind and solar, the renewables cost coming down, the battery costs are coming down. You think that's enough, or do you think we need more?
That is so disappointing. I mean, really. Václav yesterday, he said, okay, here's Tokyo, 27 million people. You have 3 days of a cyclone, basically every year. It's 22 gigawatts rate over 3 days. You know, tell me what battery solution is going to sit there and provide that power. I mean, let's not joke around. You're multiple orders of magnitude, $100 per kilowatt hour. That's nothing. That doesn't solve the reliability problem. And remember, electricity is 25% of greenhouse gas emissions. Whenever we came up with this term clean energy, I think it screwed up people's minds because now they don't understand. I was at this conference in New York, I won't name it.
James wants to build his alternative energy sector. Sounds serious. If they can get him to put real capital behind this company, I think I told you about United Fusion.
Well, James, you probably want to polish his resume a little green. I mean, he's in pole position to be top dog when Julie Steinhardt kicks the bucket, which I hear could be any day now.
This company could change not just the energy market, Gordon, but the world.
Oh, idealism, pal, it kills every deal. Look, the thing you got to know about James is he's a gambler, like me. He's got an ego the size of Antarctica, like me. So now you got his attention. How you going to shine sitting on his sun?
Mitigation doesn't always have the same value in every sector because a certain amount of warming is already baked into the system. We've already put up enough carbon into the atmosphere that things will be warmer even if we completely stopped burning fossil fuels today.
Jeff, good to see you. Thanks so much for being here.
Yeah.
So tell me about that. Do you think, we talk a lot about it, but we haven't seen policies and we haven't seen actually money moving into this area specifically. What's your take?
Well, the Spring Fund, the sustainability idea that we're purporting is to get companies to to invest more, to go faster, to be a leader and solve big global problems. And the IPCC would tell you that we're going way too slowly.
If melting ice caps and global warming aren't slowed, the Intergovernmental Panel on Climate Change foresees a grim future for the planet.
But the investor class in particular isn't so interested necessarily, or hasn't been, in investing more. So, the way I think about sustainability is deploy the available capital and be tomorrow's company, not yesterday's company. Don't bear hug coal because it pays a dividend. And what I've seen is, if you think about companies moving from kind of profit-centric to purpose-driven, that it changes the company and it generates a certain sort of productivity and innovation. And so at AES, when they moved their mission statement to something simple, impact lives, by accelerating investment in clean and safe green future. It's galvanized something. Then they signed up for the TCFD, the first Western energy company to do so, and it really it resulted in innovation. So the CEO, having done a lot of hard work and really investing in storage, is now moving his customers. He calls it green blend and extend. So we're using our coal plants as batteries, essentially, running them less, buying renewables on the market because they're cheap, passing the savings to the customer, and then migrating them to tomorrow's technology.
Well, this is obviously one of the priorities that you look at when investing. You've got a very diversified portfolio. Jeff, tell us what metrics you look at in terms of identifying the growth stories. I will say this. When I've spoken with a number of CEOs, they say when you call to perhaps, whether it's in an active way, an activist way rather, or not, they appreciate the fact that you want to work with them. Yeah. To actually grow the business. So where is the growth today? Looking at your portfolio, which is quite expansive, where's the growth in the U.S. today?
And I think, if you're addressing a big global problem, whether it's climate change or, waste or healthy food, healthy soil, you have the opportunity, if you're the incumbent and you're in the problem, to fix the problem and generate what we think is a sustainability premium, because the interesting thing about the stock market is we've kind of shortened the duration of a long duration asset. Investors have asked for more current return, when in fact equities are really a terminal value mechanism. They really want the terminal value of the company 20 years out to be, you can get current return in bonds, right? So let's let a company really, compound. And the best way to generate terminal value is to be integral to a societal need, and therefore fix it. And then if you do that, and every industry has so much disruptive technology available, you can really change the profile of your company, and thereby earn the sustainability premium.
But it's not just sustainability in terms of priorities, right? I mean, you have stakes in healthcare companies, technology companies. Yeah. Is that where you see growth?
Well, I mean, I think like a really fun example is like, who would have thought for-profit education was the answer? The Obama administration found them to be the problem. But Strayer Education, now Strategic Education, invested so heavily in artificial intelligence that they now have the ability to give you a great student outcome online while they reduce their tuition. So they're educating the adult population in an affordable way that nobody else is doing, with a really high quality experience. And ultimately, they can get the tuition to the point where it could be a corporate benefit, which then creates a certain retention for the company. And we solved a problem with market forces rather than having Elizabeth or Bernie come try to make education free, whatever that means.
Yeah.
That company now is growing double-digit in terms of emissions or enrollments, because it's a great value proposition. But it's also addressing this huge problem that I think gives a tremendous runway.
It reminds me of the saying, do right is also doing well for shareholders. When you're doing the right thing.
I don't like that. I don't like that, because you've introduced the profit motive again. Right. What you've done is why do we moralize goodness and maximize greediness? That has that connotation, so I'd rather not go there. Something else.
Jeff, it's great to have you on the show.
Yeah, thank you.
Thank you so much for joining us. And in full disclosure, you are a former board member and value act as an investor in 21st Century Fox.
Yeah, it was a great experience. You have a great company.
The parent company of Fox Business Network. So you were pleased with Rupert Murdoch's moves?
I love working with them, for sure.
Great to see you, Jeff. Sure. Thanks so much, Jeff Oven, joining us.
It's the same kind of threat as Nazi Germany. Act together.
Look, if you asked the Defense Department, you asked the CIA, you asked the defense people all over the world, tell us what the great national security threat is. You know what it is? It is climate change.
Yeah, I mean, for all of us, I think it should be.
Why do you think young people are so focused on climate change now? There's a definite disconnect between older generations and younger generations when talking about the climate. Why do you think that is?
I mean, I think it is because we, in a way, feel like it is more a direct threat. others feel like I won't be alive then anyway, so screw it.
I just don't know if they're going to do anything. And I'm so concerned with the fact that if they're not going to change anything, then what's going to happen to humankind? What's going to happen to the whole world if no one does anything?